Okay, this is a basic accounting cycle, short version. I've done some of the transactions and the journal entries, but I want you to see the process as it goes. So, here are transactions that started the business. We have the owner donating or investing $10,000. That would be to owner's equity. The owner also donated her $5,000 computer, and that goes to owner's equity. She then got supplies at $500 and charged them. She received cash of $1,000 for revenues. She received revenues of $15,000 but was charged, so that's an accounts receivable. She paid for her internet access, which is an expense, and at the end of the month she drew out $1,000. So these are her transactions, and now they have to be transferred to the general ledger, which I've set up in T accounts. So it is debit for debit, credit for credit. So cash initially gets hit for $10,000. And owner's equity right here gets credited for $10,000. We come to the next one. The computer gets credited for $5,000. And owner's equity gets credited for $5,000. Then we bought some supplies, which is right here. That gets debited. And accounts payable gets credited. Then we received cash of $1,000, and we have revenues of $1,000. The next one is accounts receivable, should be right here. Gets debited for $1,000, that's an asset, right? And our revenues get credited for $15,000. Now we're going to pay expenses, and expenses are debit, and we're going to decrease cash with a credit. The next one is draw, and that in essence is similar to an expense. So it gets debited, and cash will be credited for $1,000. Okay, those are our monthly entries, and now we have to figure out the total. So what do we have left? What are the balances? Well, this is easy. There's nothing to add. That's a $15,000 debit. This is a $5,000 debit. There's nothing in accumulated depreciation yet. We have supplies. We still have $500 worth. Accounts payable, we haven't paid anything on it, so that's owner's equity is now set at $15,000. We have revenues at $16,000. There's nothing in depreciation expense. There's nothing in supplies expense. Our internet expense account has $250, and the draw account has $1,000, and I still have to figure out what the cash is. So it looks like I have $11,000 minus $1,250, which gives us $97.50 left. Now, how do I know those balance? Well, we hope they do, but typically we then have to pull off an unadjusted trial balance, because that's how we figure out if the general ledger is balanced, number one, and how we can start to create our financials. So let's pull off all the debits and the credits and see if they balance. We have cash at $97.50. We have accounts receivable at $15,000. We have the computer at $5,000. Oh, that's a one too many zeros, right? We have the computer at $5,000. There's nothing in accumulated depreciation yet. Supplies are $500. Accounts payable, now we've got to switch to the credit, is at $500. owner's equity is a credit for $15,000. Revenues are a credit for $16,000. The draw is a debit for $1,000. The internet expense is $250. We have no depreciation expense yet and no supplies expense. Now, you could pull your financials right off of this right now, but it wouldn't be correct because there are expenses that haven't been recorded yet. And one of those expenses would be a depreciation because of the computer. So I just realized you're not seeing the unadjusted trial balance. So we'll go back and start all over again. I guess, hold on, let's see if I can pull this over. Now you can see it. You can see how I've transferred all the numbers over here. So now I've transferred here, and we're balanced, and now we're ready to do adjustments, which would be right here. And to do the adjustments then, the computer is $5,000 and we're going to keep it for 2 years. It's straight line depreciation, so that means I have a depreciation expense of $2,500 and a credit to accumulated depreciation for $2,500. We looked at the supplies and found out there were $200 left in supplies, which means we've used $300. So the supplies expense is $300, and we have to credit the supplies. Now, this entry has to be transferred up into the worksheet. So the first one is depreciation expense, $2,500, and accumulated depreciation up here of $2,500. The next one we have to put in is supplies expense on the debit side of $300, and I need to credit the supplies for $300. Now I'm balanced. This has to get transferred to the general ledger now. So we've got to make depreciation expense $2,500 and credit accumulated depreciation for $2,500, and we have to do supplies expense for $300 and credit supplies. Now that changes my balances, right? So that's no longer correct. That's $200. I now have $2,500 credit in accumulated depreciation, and this has a $300 balance, and this has a $2,500 balance. So, now, we'll leave it there. You can see how everything is fairly well set out. The general ledger agrees with the adjustments, and all of the transactions have been put in. So, let's just pull this over one more space. Whoops, maybe it won't let me. And now you can see the adjusted trial balance. This is where you're going to take these totals and create a new trial balance, which is what we're going to do in the next video.